And today's format is a little bit different for me anyway. We have a very large group of attendees who are present this morning. And because of that, what we're going to do this morning is we're going to keep the phone lines muted. And I'm going to ask that you send your questions through your chat box on your control panel. What I've got going, I've got David Overholt in the background with me this morning, and he's going to be fielding the questions for me since I'm not going to be able to hear and really not be able to monitor the questions as well as I would like. The questions will get recorded. David will answer as much as he can, and if we can't get you answered here in our session this morning, we will absolutely follow up with you and address your questions. So things of note, we are going to record the webinar this morning. It will be available for you upon request. And we're going to go ahead and get started. My name is Mary Hildinger, and I am a CPA. As one of my compatriots indicates, I'm a reformed accountant. I've got a background in technology as well as accounting, and I've been working with DWD for almost 20 years now in a software support role. For those of you CPAs like me, if you need credit, please notify Shannon. Her email address is listed in your handouts, and in the subject line of the email, please indicate that you're requesting CPE credit. We'll go ahead and get those letters sent out to you within the next few days. DWD Technology Group. We are a division of Doolin, Ward & DeWald CPAs. We've got offices in the Fort Wayne, Indiana area, Marion, and in Indianapolis. And the mugshot of our tech team there, basically we're comprised of 10 software consultants and 11 network engineers. So we've got the ability to basically give you services as far as software support and hardware support. And if you've got any kind of questions regarding any of that, please feel free to contact me and I will get you directed to the appropriate person. So today, correcting common mistakes. None of us is perfect, and I'm going to be the first one to admit that I am not perfect. And what we're going to talk about are some of the ways that we can go through and we can correct issues that have occurred in the software. Somebody miskeyed something, we picked the wrong thing to apply to. We want to undo those transactions, and I want to share with you some tidbits on how we can make these things happen. So the first thing we have to do is we have to evaluate the issue. You know, what is wrong? Did we misdate a check? Did we pick the wrong invoice to be paid? Did we put the wrong date on a transaction? How did we find out that this information is incorrect? So what report did we look up? What inquiry did we view? How did we determine that something is wrong? And then let's figure out how to back ourselves up from that and be able to correct the issues. But the most important thing, don't panic. There is virtually nothing in the software that we can't correct in some form. So even though we've made a mistake and we can't just go right back into the original transaction to fix it, we can still fix it and we can still make everything okay. Today's topics, we're going to talk about accounts payable. I'm going to delve into accounts receivable. I'm going to talk a little bit about sales order transactions, purchase order transactions. I'm going to get to some payroll information, and then we'll finish up with a few corrections that we can do directly in the inventory module. Now, you all have handouts that have been sent to you. And I'm going to probably get away from the handout itself because I want to do a lot of the demonstration directly in the software. So I'm going to go ahead and jump over and pull my Sage 100. And for some of you folks, you may not recognize this view. Sage 100 is in a metamorphosis. It is changing, it is improving. Some of the ways that things look, some of the way that things act may appear a little bit different, but deep down it is all still the same software. So what we're going to do this morning is we're going to talk about invoicing. And common mistakes that occur in accounts payable invoicing is that we've maybe picked the wrong GL account, we've mistyped the dollar amount for the invoice, maybe we have the wrong invoice date or the wrong due date, or maybe we posted it incorrectly to the general ledger. So we're going to talk a little bit about some ways that we can make corrections to accounts payable invoices. And the way that we typically do that is basically by doing a backwards transaction, if you will. So we're going to go into our accounts payable invoice data entry, and we know what invoice number, we know what vendor, and we know what's wrong. So the assumption here right now is that we need to change some dollars on an invoice that was originally posted. And in order to do that, we're going to pick up who the vendor is, and in my case, it's my vendor Airway. You need to know the exact invoice number, okay? Because if we don't get the exact invoice number, that the software will guide us through as far as being able to fix this appropriately. So I'm going to go ahead and put that in, and I know that a number that I'm seeking because I'm here already on file. What would you like to do? Would you like to hold the payment, separate check for this invoice, or do we want to do what's called an adjustment? And in our case today, because we're going to fix dollars on the invoice because we miskeyed our invoice amount and adjustment. When we pull up the original invoice, it does pull up the original invoice date and the original due date based on, so we'll basically undo or reduce the amount of the invoice by a certain dollar amount. And to do a reduction or basically what we would consider a credit memo, we're going to put a negative dollar amount in. And so I'm going to reduce the invoice by $100. And we go ahead and tab through all the rest of the fields just like we're doing when we're entering in an invoice to begin with. And we go to our general ledger and we find if the vendor has a predefined GL account number, we'll go ahead and pull that across. If not, if we need to change it, we absolutely have the ability to change that GL account number here. So the key here for correcting a dollar amount or a GL account is to effectively put in the vendor, put in the invoice number, and then identify the amount that we're going to change for that particular invoice. And then we just go ahead and we post it like we would any other transaction in our grouping of transactions. Due to time constraints today, I'm not going to go through and post everything because I think we all should be fairly familiar with the posting process. The only time I'm going to reference to that is when we talk about changing the date on a transaction. And we've got a couple of other kinds of corrections that we're going to go into as far as something posted with an incorrect date. Another transaction that we can do is basically to change the invoice date. Maybe we don't need to have any dollar amount change. Maybe we miskeyed an invoice date. Maybe we put it into June when it should have been a July invoice, or we put it in August and it should have been a July invoice. Again, it's all very much the identical situation as far as making changes. Pick the vendor, pick the invoice number. Again, we get the notification that the invoice is already on file, and we just simply want to make an adjustment. Now, because all I'm trying to do here is to change the invoice date, or even just change the due date on the invoice, that's okay too. I don't have to make any dollar adjustment. I just go ahead and I put in whatever my new invoice date is. I don't have to worry about a general ledger distribution because I have no dollars that I am changing. And I go ahead and I post this as I would any other transaction. The GL date here is not really terribly relevant because I have no dollars that I'm transacting on, but we'll go ahead and walk through here and we'll see the invoice has been adjusted. So you can note whenever we have affected something that is already on file, we'll get a marker indicating that it's adjusted. We'll see what the new date is. Again, the terms are basically end of the month for this vendor, so that's why the due date didn't change. And we see that we have no dollars that have physically transacted. So we'll go ahead and process just like we would. And because it is a no GL effect, we will not get any daily transaction register that goes along with this. With regard to an invoice that maybe got posted in an incorrect period, this happens very, very, very frequently, especially around the end of the year. We're in January and we neglect to put last year's calendar year, so we might end up posting something into December of the current year. Again, we're going to use our invoice data entry functionality to make these corrections. Now, one of the keys that I want to caution you on is if the invoice has already been paid and we're desperately trying to get our year-end aging reports to tie out to our general ledger, we might have to simply consider backing out the original transactions in their entirety and then re-entering and starting over. What I find is that as we try to reverse reversals of reversed reversals, we get ourselves so mired in a series of transactions that don't make any sense that it's really just better to cut the umbilical cord and just put in a fresh transaction so that we don't keep compounding our issue and not getting the reporting the way that we need to. And when we're doing a reversal of an invoice, what we want to make sure of is that we use all of the original dates. So I'm going to go back to my friend Airway here. And I'm going to go back to my invoice that I've been playing with. And I know that it's already on file. Here's my new invoice date that we just changed. So we did pick that up in the system. We're going to actually credit off the entire invoice. So again, I know coming in that I need to adjust off a specific dollar amount. I know what general ledger number that was used on the original invoice. I need all of these pieces of information. So I'm going to go ahead and adjust out my invoice in its full amount, get it allocated to the correct GL accounts, and I'm going to zero this particular invoice out. I'll go ahead and post this one because I want to just go ahead and show you that I've wiped it off the face of Sage. And the key there was making sure I did everything as of the original dates. So I need to know what my transaction date was. I need to know what my invoice date was so that I can back this out exactly as it started. That's always the key. If you do something one way, undo it exactly in reverse. And that's kind of the theme that we're going to go through today, just to make sure that we pull things out correctly. We see that we're getting our dollar amounts, and we're going to go ahead and wipe this invoice out completely. We're going to go ahead and run our daily transaction register, and again we see the dollar amounts and we see the reversing's that are occurring, and we'll go ahead and get that posted. Now when I come in and look at that particular invoice, that is all going to get wiped out and be off of our books. So we can start over. I don't recommend using the exact same invoice number I would rather see that you actually maybe put like a letter A or some kind of a marker behind it so that you've got the core of the exact same number, because if we keep trying to reuse that invoice number over and over and over again, it's going to compound some of our issues as far as getting a clean payables report at the end of a period that we're trying to reconcile. So that's a chunk of corrections that we're going to do as far as accounts payable specific invoices are concerned. Think of these again as your non-inventory related invoices. These are going to be things like your rent, your utilities, things that are not product specific, because we want to do those types of corrections in our purchase order module because we have inventory that we have to take care of as well. The next thing up I want to talk a little bit about is reversing checks. We always have the dog ate the check, it got lost in the mail, you know, it got washed in the washing machine or something like that. So we need to come up with a process to undo a check and either completely reverse out the expense of the original invoice or to put ourselves into a position where we can repay that particular invoice. And the function that we'll use for that is our manual check and payment entry function. Things that we need to know about our check. We need to know from which bank code it was written, and we need to know what check number we're trying to affect. So the check number that I have, I know I wrote off of my bank code D, and I know what check number it was. Because the system already sees this check number on file, we get our first question, is this a check reversal? And we're going to answer yes to this. And the next question is probably the most critical question that's out there. Do you want to recall invoices paid by this check? Very simply, do I want to repay this invoice? Do I want to get it back into my payables listing so that I can select it for payment or not? And if I answer yes to this question, we'll see our original check date. We'll see the dollar amount that the check was written for. And when I go to my lines, I'm going to actually see the 2 or 3 or 1 or however many invoices that were paid by this check. And when I post this reversal, it means that these invoices will be put back onto the vendor's record and they will be payables to be selected for payment later. If we do not want to recall these original invoices for payment, we do need to know what comprises the background of that invoice. What general ledger account did the invoice or these invoices get posted to originally so that we can reverse them completely and take the expenses off our books. So to find that information, I would pull up our invoice inquiry, and I need to be able to grab that number there. And by looking at the lines, I could see what this invoice actually came from. Now in this case, this happens to be a product invoice, and that's okay for me right now. I'm going to work around it as if it was not necessarily a product invoice. I don't want to repay either of these, so I'm going to, instead of recall the invoice, I'm going to actually go back to the original GL account that these invoices were based on, and I'm going to pick the GL account numbers. Notice I don't get any invoices to choose from. I'm going to actually come back from the GL account number that I want to distribute all of this to. So you've got two choices, and I'm going to come back and I'm going to redo this again. I'm going to do it a little bit more slowly because I kind of jumped here. But the basic question is, do you want to set the invoices back up to be repaid, or do you just want to expenses because we're not going to repay it? Maybe we created a different invoice and paid that invoice instead. So the choices on the reversal to recall the original or to basically distribute on your own to the GL accounts that were affected. So we know our bank code, we know our check number, we're going to reverse it, and whether or not we're going to recall the invoices for the future. If I recall the invoices, these will show back up on my payables. If I don't, I am responsible for allocating it to the right GL account based on where the original invoice posted. So we have to do a little bit of legwork to make that happen. The other thing that can happen with checks is that maybe we've gotten the wrong check date. And I kind of talked about this a little bit ago when I discussed the actual AP invoice reversals as well, because maybe we needed to correct a date on our aging report. We either wrote the check wrong, we posted the invoice wrong, and then we paid the invoice. So again, anything that we do forward that we have to undo, we have to unravel it exactly as we had put it in to begin with. So if I'm going to work on a particular check and it was written on the wrong date, I have to undo it so that I can recreate this check and write it with the right date. Or even better, when I actually go to post it, I want to undo the appropriate GL date that was affected. So whenever I have my check, watch this date. I cannot stress that enough when we're doing anything within the software. Try to make sure that your transaction date and your general ledger dates are in sync, at least within the same fiscal period, so that we don't run into reconciliation issues as we process our data. So if we're going to reverse all of this, I'm pulling back the invoices because I want to correct the check and I want to reissue the check. And at this point, that check is completely voided. I'm not going to reuse that same check number. I would end up creating a new check number in its stead so that I can go back and I can reselect those invoices for payment. Okay, so that's the AP. Those are some big areas of accounts payable where we always run into trouble. We've misdated something, we've put the wrong dollar amount in, we've lost a check. Anything that we need to do, we've got some steps that are available here that can help us back up, refocus, and then push ourselves forward into putting the data in more correctly. I'm going to move over to accounts receivable now. We're going to talk a little bit about some of the things that we can do here in the AR module. And for many of you who have, well, for all of you who have the inventory module, you have both accounts receivable and you have sales order. The origin of an invoice is distinct within the software. If I create an invoice through the AR module, I know that I don't have access to my inventory items, but I can still create AR invoices. When I create sales order invoices, those are typically because I am processing with inventory. I am going to talk about some steps there in the sales order invoicing, but I want to start first on the AR side because there are a number of things that we can do without necessarily pulling inventory into account. So again, things that we've done in invoicing. We've put the wrong account number, we've put the wrong dollar amount, maybe we've put the wrong date on our invoice, and we just need to make some easy corrections here. So my easy example here is I need to change the date of an invoice. I misdated it, and I want to fix that so that the aging is correct. And in order to start this out, things I need to know. I need to know the invoice number, and I need to know the customer number, okay, very much like what we saw on the AP side. So in this case, I'm going to go ahead and key in my invoice number, and the system says, hey, I recognize this has already been used. Are we okay? Do you want to still use it? Absolutely. It's going to get one better because I'm actually going to reuse the same vendor to whom this invoice number belongs. And it asks me a similar question. Hey, it already exists. Would you like to adjust it? And again, adjustments can take many forms. It can be a $0 adjustment to just change the date or the due date. It can be a plus or a minus dollar adjustment to increase or decrease the balance. Or it could have something to do with sales tax. Maybe I charged sales tax on an invoice, or I didn't charge sales tax on an invoice, and I need to correct that balance of that invoice. I have some ways that I can make that adjustment to change the balance due on that invoice. So we'll go ahead and change the invoice date. This one's kind of the easy one. I really wanted this invoice dated on the 7th, and you'll notice my due date changes because that flies along with my terms code. I'm not changing any dollars on this particular invoice. I don't have to allocate anything on the lines. And I'll go ahead and process this invoice as if we needed to change that original date. And I've got a question here that's come in, basically how to match the GL date and the transaction date. And I'm going to come at it from a couple of different perspectives here. The first thing that I want to take a quick look at is the actual how to determine what the GL date is and compare it to the invoice date. So I'm going to use that invoice that we were just working on here. And what we see here is the source. Obviously, we know that's from the accounts receivable. I haven't posted yet, so my invoice date is still my original transaction date. To tell how it was affected on the general ledger, I need to look at the journal that is attached. So when I click on the drill down here next to my source journal number, I can then find the posting date. This is the GL transaction date. And this is what we need to figure out. If we get this posted in the wrong period compared to the invoice date, this is where we start to see discrepancies when we look at an aging report and try to compare it and reconcile it to our general ledger. So what we want to be able to do when we are making these corrections is when we post our sales journal or any of our other registers, this date here is the date that my general ledger gets affected. It is not the invoice date that is on the original source document. So this is where we want to watch. This is where we need to know how to back up. This is how we want to undo something that we might have done. Now, because I'm just merely changing a date and keeping it in the same period, then I don't have to worry about any general ledger changes. But if it is something where I need to undo or correct or back up dollars, I definitely want to make sure that I am affecting my general ledger in the correct way. And then again, we just walk through, because it's a $0 adjustment, we don't have to panic that the file is empty when we go to run the daily transaction register. So for accounts receivable, non-inventory related, this might be a really easy way to make adjustments to existing invoices. We can also use the AR invoice data entry to adjust for our sales tax. What we want to do here is I want to make an item untaxable that was previously taxed on an existing invoice. So I'm going to go back to my friend here that I had been working with, and we're going to take a good look at what comprised the invoice. And when I look at my line items, I can see I have some miscellaneous codes in this case. We'll use a similar philosophy in sales order. And I also notice that I don't have sales tax being charged, and I should have charged sales tax. And I'm only going to charge it on one of my items. So what I need to make an adjustment for is the sales tax on these widgets. All right, we bought 3 widgets and they should have been taxed, whereas the other items weren't taxable necessarily. So again, into the invoice data entry, call up the original invoice, call up the original customer, and I do want to make an adjustment to it. I get my snapshot of my non-taxable product versus my taxable product and so on. And what I'm going to do on my lines page this time is I'm going to actually make these items taxable, but I have to back off the same items non-taxable. And here's, I'm going to span my screen out just a little bit here so I can get some more information. You can see how I've made this item taxable because the tax class, but I have to back off the original that didn't get charged tax. And I'm going to do that by doing a -3 quantity, and I'll make those items non-taxable. So net product is $0. I'm not changing the price, although I could. I'm not changing the quantity. Again, I could. I just want to change the taxability of what should have been charged sales tax that previously wasn't. Now, they have exemption numbers in here, so I'm going to eliminate the exemption numbers, and you can start to see taxes starting to get charged for whatever jurisdiction because of the items that should have been indicated as taxable sales. So things to watch for. If I've got an exemption number, that's going to override any taxability, and that's where I'm going to come look to make sure that I get my sales tax calculated correctly. Now I can see that I am increasing the balance of the invoice by the amount of the sales tax that should have been charged. Now, questions that we get frequently are, can I reprint that invoice with the new totals on it? Not easily, unfortunately. If you do need to reissue an invoice to a customer with corrected totals, my recommendation really is to cancel or void out the original invoice, reverse it in its entirety, re-enter it correctly, and then issue them a new document from scratch. It would be possible. It would just take a pretty significant amount of work to get the forms to print all of the original plus all of the updates. I think from a cost perspective and from a simplicity sake, it would be best to just completely reverse the invoice and reissue a new one. If you don't need to issue a complete document, make the adjustments here, get your balances updated, and move forward with the receipts from there. So we've covered how we can correct invoices, change a date, change a sales tax amount. Other things that we would want to consider on the accounts receivable side are our cash entries. Okay, maybe we have miskeyed a dollar amount on a cash receipt. Maybe we applied a payment to an incorrect invoice. There's a couple of different things that we can basically do, and the easiest way to look at fixing cash receipts entries is to effectively do a negative cash receipt in order to undo what we've done. So we've got our transaction that already posted, and what we're going to do here is we're going to undo a cash receipt because we picked the wrong customer to apply to an invoice, we picked the wrong invoice. Something has caused us to want to undo that cash receipt. And I'm going to pick up a customer here, whatever check number that might have been, and we're going to put a negative dollar amount to reverse the cash receipt. On the lines page then, what we need to be able to come across is possibly the invoice number that we want to apply the cash receipt against. If it shows up in our list, that's great, because then we can go ahead and return that payment against that invoice to increase the balance of that invoice. If that number doesn't exist, we may have to manually type that in. But I'm going to add back $5,000 to the balance of this invoice because it was inappropriately applied to that invoice when we originally received that cash. So cash receipts entries are really powerful. We can do lots and lots of things with it, whether we put in a positive cash receipt or a negative cash receipt. And basically what we're telling the system, zoom that up a little bit for everybody, we're going to put back $5,000 onto the balance of that invoice so that we can receive payment against it later. So anything we need to correct for cash receipts, negative cash receipts are just very easy transactions to do that will allow us to reverse the effects, because I do often get the question, hey, I received a payment but I put it on the wrong customer, or I applied it to the wrong invoice. Negative cash receipt is the way that we can correct that. And if it's the same customer but we just picked the wrong invoice, we can actually do a $0 cash receipt. And I'm going to play again with my friends here because I know I've got a couple of invoices I can work with. I'm not going to put a balance in here. I'm not going to receive an amount. but I might pick the first invoice and put a negative amount to increase that balance because I had originally applied it to the wrong invoice, and I can now decrease the invoice balance due because I'm now applying that payment invoice. So a negative will increase that balance due, a positive will decrease it, and I always like to do the negatives first so that it distributes correctly. But a $0 cash receipt can be a very powerful tool to allow us to reallocate balances on our customers. Okay. I'm not going to go ahead and post that. I just want to keep rolling here because I've got a couple things I want to talk about in sales order and in purchase order, and I know I'm running a little thin on time here this morning, so I'm going to move over to the sales order module. And again, sales order invoicing, because we're typically doing this as a product-based invoice, I need to be able to affect my inventory, and doing any changes in accounts receivable isn't necessarily going to work because I may or may not be able to affect the quantity of the materials that I sold on that invoice. Excuse me. So what we're going to take a quick look at here is in our invoice data entry, I'm going to go ahead and call up an invoice. And again, it knows that it's on file, so we're going to actually grab the actual customer for whom this invoice was originally created. And I can either delete the invoice or I can make adjustments. I can create credit memos. I can do different kinds of transactions. And this is actually where a lot of our power initially lies. In accounts receivable, I was calling up the original invoice and I was adjusting it. In sales order, I would be much more inclined to create a new transaction number and make it a credit memo or a debit memo in order to apply a change to a specific invoice. So I'm going to actually just create a new transaction number, and I'm going to create a credit memo for my customer. But the key here is that I want to apply it to an existing invoice number. Okay, so create a new transaction, pick what you want the type to be, and then apply it to the original document so that we can have an effect on the final balance. Credit memos used for a lot of things. I need to correct the invoice because it's wrong in some fashion. The customer returns product to me and I need to get that product back in my inventory correctly. A lot of different things that we can do with this. Now, the one small drawback when creating a credit memo or doing an adjustment of some sort to a sales order invoice is that it does not recall what the original items were from that invoice. So it's not like a sales order transforming into an invoice. We have to know what it is that we want to adjust, return, correct in whatever fashion that we're doing. So we'd have to look up the original invoice. We'd have to find the items that were on that. And I have done that, and I know that I'm going to pull up this particular item, and I want to return 2 of these items, and for this customer, the unit price was, this is what got charged out to the original invoice. And of course I have to allocate it because this happens to be a lot-based item. If it was a FIFO item, it might ask you for the FIFO layer. If it was standard costed, it's not going to ask you anything. So you have to be aware of what the item type is to get this all correct. And then what I can do is just simply return this product by accepting this credit memo. I know that that credit memo will apply to the original invoice number, or maybe I want to change my price of that item and effectively change the balance for that particular item. Now, because this is a credit memo, when I enter a positive quantity, it's going to return that material to my stock. When I enter a negative quantity, it's going to take that out of stock. So this could get confusing, and if we need to, let's do these in two separate transactions. Let's put it back in at the amount that it was originally charged, create another transaction to take it back out at whatever the new price is, because what we're working towards is an adjustment of that particular dollar amount. Okay, but again, powerful tool to back us up for a lot of different situations. I've got a wrong quantity, I need to return items into my stock from my customer, or I need to change prices. Okay, when I print this particular document, this is the credit memo, and it's only going to reflect this change. It's not going to reflect the total adjustment to the original invoice. So again, very much like the AR invoicing, when we go to physically print this, we're going to have to be considerate of what we're going to get out of it. If we have to reissue a correct document, my best recommendation is to just credit it off completely and reissue a new document to your customer. So I have a question that's come in, and I'm going to hit this up really quickly here because I'm going to do a little bit of a game. Basically, rather than picking the invoice ahead of time to apply the credit to, I'm going to make this an open credit. And in order to make it an open credit, I am not going to reference an invoice number when I create that credit. And that's the same thing on the accounts receivable side if I'm creating accounts receivable credit memos as well. So let me get this posted really quickly here. And get all of my information closed here. And again, applying a credit memo to an existing invoice is pretty easy to do because we're going to use our friend the cash receipts entry. So I am kind of flying through the posting process because I think we should all be pretty good with what's happening in the posting. And to apply an open credit to an existing invoice, we're going to return to AR. We're going to go into our cash receipts entry, get a transaction started, whether or not you're using batches. And I'm going to do this as a $0 cash receipt. And we're going to pick our customer for whom this application is going to occur. And we can put in anything we want here as the check number. Again, I'm going to put in a $0 amount received. And what I want to look for would be any of the credits. In this case, I have an open credit on this customer's account. And then I want to apply it to an existing invoice. Okay, and again, anytime I'm applying credits or negatives, I want to try to use those first, because if I don't, if I go ahead and say, well, I'm going to credit this invoice with this credit memo, I still have to come back in here manually to fix this number. So if I get the credit first, then pick the invoice, it makes it a lot easier for you, and we don't get the out of balance issues or not having the right application of that credit memo. And then we just go ahead and post that like normal. So that's applying a credit memo to a customer's open invoice. Okay, I'm going to run into purchase order because I've got a couple of things I want to talk about here. And in purchase order, for those of you who have the inventory and such, our mantra is quantity ordered equals quantity received equals quantity invoiced. That's what always helps our purchase orders complete correctly in order to get them out and off of our open purchase order listing. With that being said, there are situations where I have either over-received or under-received items. I didn't receive them at the correct cost, all different kinds of things that can be occurring. So what we're going to talk about here is a purchase order that I need to change the cost on the items that I'd received. So here's my purchase order. And I can see that I've got 2 of these items, and they got received at a unit cost of $59.55. Well, that wasn't the right cost. I want to correct that, so I need to basically return these items and then be able to re-receive them at the correct cost. Under the MATREC return functionality, we have a return of goods entry function. This is probably the most straightforward way to make things happen. It just is a logical way to enter the data. So I call up the purchase order number. I'm not going to do an invoice because I don't want to create the credit memo. I just simply want to return the 2 items that were received at an incorrect cost. So that was the cost at which they were originally received. I go ahead and I post that just like I would any other receipt or return. Get my dollars here, get all that taken care of. Get that updated. And then I'll come back in and I will re-receive those goods, but I will re-receive those inventory items at the correct cost because I want to keep my inventory valued correctly. And all I have to do is I just have to start up a receipt of goods entry for that purchase order. And instead of receiving the 2 at $59.55, they were actually $62.37. Now my inventory is going to be correct, my count is going to be correct, and all my dollars are going to be appropriate. This is helpful if you can catch it before the invoice occurs. Even if you can't, we still can do the cost change because all of the dollars through that purchases clearing account. So if we realize that we have received that material, invoiced it, when the invoice comes in we realize it was at the wrong cost, we just go ahead and do the return of goods entry to correct the items and then do a receipt to go ahead and bring them back into stock. We can do similar things with the invoice entry. We can correct, maybe we recorded the invoice incorrectly, so we can actually do a negative receipt of invoice entry, because I don't want to necessarily return the product, I just simply want to correct the dollar value of that particular invoice. And the one thing that we have to be careful of here is the invoice number field. I cannot reuse an existing invoice number field. I actually need to come up with some new transaction number, and what I might end up doing would then be to just use maybe like a CM or something in the background. Let me grab a different vendor here. Because if I try to pull that same invoice number and try to update it, it will yell at me. So I'm just going to give it a unique invoice number to fix it. And in this case, I'm going to actually do a negative receipt of invoice so that I undo the dollar amount that was originally invoiced incorrectly. So when I do a receipt of invoice that I want to back out, I'm going to do a negative quantity for that line item, leave my cost positive, let the extension do the math for me, and then I would just go ahead and post this like I would any other receipt of invoice entry function. Okay. I know I am running pretty fast this morning. Please don't panic. This is being recorded, and we can go ahead and get these out to you after this concludes. All you have to do is just shoot us an email. Shoot that email to Shannon. Her email address is in your handout materials, and just simply put the title line, request recording of webinar, and that will get that. We'll get that back out to you when we get it converted and uploaded. I do want to spend just a real quick minute on payroll. I know not everybody uses payroll, but I've got enough people in here that I want to walk you through reversing a paycheck. And kind of some rules of thumb that have served me well over the years is try to limit your adjustments in the same month if you can. Basically what we want to be able to do is not necessarily mess up our 941 reporting. In a worst case scenario, we'll be able to do some journal adjustments if we keep it in the same quarter, but it would be nice and smooth if we can do it in the same month, but we know that's not always possible. So we'll just go ahead and focus on the reversal process. If we get it out a quarter, I've got an alternate way that I would have you take care of things just so that we don't get our reporting messed up. I am going to kind of keep plowing through here because I've got just a few more things that I want to cover. I want to finish the payroll part, and I want to talk a little bit about some inventory transactions. So if you have questions, keep flooding them to David. He's going to answer them as best he can, and if not, we'll come back and we'll review them and get back with you. If you can't stay with me, by all means, feel free to drop out. Otherwise, hang in here and I'll just keep going, okay? So talking about payroll and reversing checks, things that we need to know. We need to know what the original check was constructed of, what deductions, what taxes, what earnings, because we have to basically undo each and every element of that to completely take it out of the employee's pay records. And forgive me for just a moment. I've got one question coming in about how to apply an open credit in accounts payable. And what I would like to do is let me do a really quick diversion so that when I come back I can focus really hard on the payroll. Applying open credits in accounts payable a couple of different ways. One of the ways that we do it is by writing a check for other invoices that are out there and simply selecting open credits along with the particular invoices. And so the net payment would end up being whatever invoices less whatever credits we find. So if I'm looking around here and I see these transactions, I've got a credit balance here and I've got an invoice balance here. I've also got some other invoices for this particular vendor, and if I grab them all, I would effectively pay the total invoice less the credit. Well, maybe I don't want to pick up, or maybe I'm not ready to write a check to this particular vendor. I cannot simply select a plus and a minus because the system doesn't let me write a $0 check through check payment and check printing. The way that I can do this, however, is to use our friend the manual check entry, because a manual check entry function will let me get away with a $0 check. And the way that I make this happen is I pick whatever appropriate bank code, and I use the key APP and a 3-digit number, anything from 001 to 999. I don't have a running listing of these necessarily. I could continue to reuse the same number over and over and over again, but I'll just start with 1, and if it tells me that it's been used before, maybe I'll try a 2. Somewhat doesn't really matter because I'm not doing check reversals with these. I'm just going to continue to use this to apply credits and debits. And you notice I can't even get into the check amount field. So what I'm going to do is I'm going to call up the vendor, and on my lines page then I can do a multi-select, or I can select one line at a time, but I'm going to pick the 2 items that cancel each other out, and I net a $0 check. Once I have that, I can go ahead and post this, and because I'm taking an AP credit and an AP debit, I really have no net effect on accounts payable other than from the standpoint of the details of which invoice number applied to which credit memo number. But because it says zeros and it was all the same vendor, the file is empty and we're all good to go. So just to take a very quick look back at that vendor, I can now see this invoice has been balanced out with that credit memo. Okay, so the APP number through a manual check entry will allow you to apply a vendor credit memo to a vendor invoice without having to write a physical check. Okay. All right, let me roll back over to payroll here. And again, to get ourselves back on track, we need to know the employee, we need to know the bank account from which the check was written, we need to know the check number, we need to know the earnings, we need to know the taxes, and we need to know any deductions that would have been taken on that particular check. And your perpetual history report is your friend. So we should all have our perpetual history turned on, especially because of the ACA reporting requirements. And we can use that to dial in on that check in order to make a correct reversal. So I know my gentleman who his dog ate his check and he would like it to be reissued. We happen to be in the same month, so we can go ahead and do a reversal. And I'm going to grab the gentleman here. The big key here is print check. Print check yes means I'm going to run it through its paces like I normally do. Print check printed means that this check was already marked as having been printed. Or print check no, which means I don't have to physically print the check in order to run the check register. So I'm going to make sure I set print check to no. I'm going to enter in the check number, and I've got the check date, and I'm going to start by putting everything in as negatives, okay? So I want to put in a negative net check amount. Now, if this employee was on direct deposit, we would have to put in, rather than a negative net check amount, we'll put in the negative direct deposit amount, okay? Normally we don't do the negative direct deposits because we're not going to upload a negative to our bank, but from an internal reporting purpose, we would reverse a direct deposit virtually identically to how we're going to reverse a regular check, okay? So on the lines, we've got our earnings code, and everything that we do here, we're going to do negative. So I'm going to do the hours as negative because I want to take away the hours that he worked, okay? And then I want to take my deductions, and you'll see that health insurance, well, that came in as a positive. I just simply need to make it a negative. So a negative deduction puts it back, okay? In this case, 2 wrongs do make a right. I've got my 401. You'll notice my 401 already calculated a negative because it looked at the dollar amount of earnings, and because that was already negative, this backed itself out correctly, okay? I'm going to go ahead and accept, and it says, do you want to recalculate the deductions? No, not this time. I don't want any system override to change what I am doing because I need to take all this stuff out. Now I get into the taxes. So I'm going to go ahead and plug in a negative federal tax amount. I'm going to plug in a negative FICA amount. I am not going to plug in a tip tax because that was not on the original check. Be careful of that because that will alter your employee's W-2 reporting. No EIC on this particular check, so I'm going to go ahead and skip over that. And then I only am tracking Wisconsin state tax for this employee. So I will enter that in. Notice all of these are negatives. That's putting that back. It's not deducting that from that employee at the moment. And the beauty is, because I had everything correct, it allowed me to accept this transaction. You'll see the marker here that this is a negative check. And that's okay. We want it to be because we want it to take away from the employee so that we can turn around and reissue a new check. And at this point, we simply do the calculation function just like we always do. Even though I physically typed in the tax amounts, I have to run the calculation. And then it probably would behoove us to run whatever other reports along the way here that you might normally run. The only thing that we can skip over is the fact of the check printing, and it's going to tell us right away that we don't have to physically print a check. We can simply go ahead and jump straight to the check register and get this posted and take this paycheck off this employee's record. Now, a lot of things, a lot of questions that I get, an employee says, you know, I washed my check and I need a new paycheck. And it may or may not have been in this current month. More than likely it was a month ago, or maybe more than a few weeks ago. It might have crossed a quarter. My recommendation for this is to not reverse the payroll check, but rather to issue a manual check out of the AP module and offset it with a miscellaneous cash receipt in the AR module. If I don't have to mess with payroll numbers, or the less I have to mess with payroll numbers, the better. If I can just write a net check to that employee and offset it with a miscellaneous cash receipt, that's really going to be as smooth a process as I could ask for. And just very quickly, to show you what I'm talking about here, the miscellaneous cash receipt would be, it will allow us on the bank rec to physically do an in and an out of clearing plus and minus, because I'm still going to clear the original check as it would have cleared normally had that employee actually cashed it correctly. So the 261.54, I'm going to just do a miscellaneous receipt, and my customer number is going to be our mythical customer called cash. I don't really care a whole lot about the name necessarily. I don't care about a particular check number. I want the amount, and on my lines you'll notice I can't pick any invoice numbers, but I am directed to a general ledger account number. And this is going to be some GL account. It really does not matter what account you choose. If it makes you feel better, you may absolutely pick a payroll account number. That's fine. And we're going to go ahead and post this, which I'm not physically going to do, but we'll go ahead and post this, because immediately what we're going to turn around and do from our accounts payable is to write a manual check for that exact same amount. And if I don't already have this employee set up as a vendor, I will use my mythical not on file vendor and actually put his name. And then I want to redistribute that to the exact same GL account in which I made, and of course I lost that GL account. There we go. That I made the original deposit. Okay, so what I'm getting is an in and an out through a GL account. I'm getting cash into that employee's hands. He has a check he can take to the bank, but I have not messed with my payroll numbers in such a way that I skew my 941 reporting or my state reporting or anything like that. So a lot of different things that we can do without digging into the gory details of backing out a payroll check just to turn around and reissue it. But if I need to back out a check, I absolutely can do that, and I run that as a negative payroll check through payroll data entry. Okay. I'm going to just buzz through one last area here, and I'm not really going to get into a lot of gory details, but what I want to talk about in inventory are some of the types of transactions that we can do in order to make corrections in our system. So under our inventory management, under the main folder, we have our function called transaction entry. And this actually gives us a number of different types of transactions that we can process. A sales transaction would be a means to record revenue, issue material, but not necessarily apply it to a specific customer. I don't see this used very often because we have the sales order module that actually implements this same functionality for us. If we didn't have the sales order module, this could be a way that we could make that recognition. We have the issues transaction type, and this one is also a way to relieve inventory from our system, but we get a little bit more control over this particular transaction because we can direct a GL account that we might want affected rather than the typical revenue account or the typical adjustments account that is defined in an items product line. We have the transfers, and this functionality basically allows us to move product between warehouses. We have the receipts transaction, which is the compatriot to purchasing because it will bring inventory in and it will offset it to our purchases clearing account. I don't typically recommend using this function. I would rather see you do it through the purchasing function so it stays a little bit more consistent. But if we weren't technically using the purchase order module, we can absolutely mimic the transaction flow through a receipt transaction. And then our last transaction type here is probably the most versatile because it's our adjustments transaction. And this will allow us to do all kinds of transaction fixes, if you will, where we can specify an item. We can do a negative quantity adjustment to take away inventory. We can do a positive quantity adjustment to add inventory. We can change our unit costs. So if, for example, we may have received product in and we don't have the purchase order open anymore and we're really not going to receive that purchase order, we can adjust that quantity of inventory at its incorrect cost and turn around and put that inventory back in at a correct cost and even get it in, you know, wherever it belongs. Now, lot costing here, all bets are off because the costing is going to go by that. So let me change that and redistribute to a different lot. So that I now have the right dollar amount for that particular lot. But again, standard cost FIFO, pretty easy to deal with. The standard cost gets a little fun because if I want to go through and make my changes, I want to get all my inventory out, I want to fix my cost base, then I want to put all my inventory back in. That's really, really big for FIFO and LIFO costing. Standard costing, we have some utilities that we can run that can help implement that change. But in short bursts, the adjustment, take an item out at the wrong cost, put that item back in at the correct cost, that's going to basically facilitate keeping my quantities correct but adjusting the dollars on my general ledger as need be. And then this transaction just goes ahead and posts as I would post any other type of transaction. Wow, we've covered a lot here today, and I apologize that I haven't been able to interact with you a little bit more. This is kind of a weird setup for me today because I don't get to hear you guys on the other end, but I do want to thank each and every one of you for coming today. Please keep feeding questions in. A couple of things that I want to point out. Coming in September, we are going to be hosting 3 different user group meetings. One is going to be located in Indianapolis, and it will be held at the Indiana CPA Society facility up on the north side of town. On Tuesday, September 20th, we will be broadcasting a live webcast. For those of you who have attended our user group meetings in the past, pretty much the same format. It's just that if you're not able to travel or be available on either of the other 2 days, we'll have the live webcast available for you. And for those folks in the Fort Wayne area, we'll be holding our Fort Wayne user group on Tuesday, September 27th. Please make note of the website here, the DWDTechGroup.com event section. And another thing I would like to also point out is our updated website. We've made it look a little bit more modern, and we've added some pretty healthy features and functions to it. On our resources tab, this is pretty cool, even if I do say so myself. What I want to share with you, first of all, our Stage 100 newsletter. You may be receiving those already via email, but this is another copy of the various newsletters that have come out. The resources, upcoming events, that's the link that I just showed you on that previous slide page, and it lets you know of the different webinars that are coming. We've got today's event and then our user group coming up. The other thing I want to share with you, of course I moved very quickly today, but so much of what I covered today is also written up, or short videos have been recorded for these same types of tips, and we're expanding our video base even as I speak, where any of the documents that we're seeing under the tips and tricks will also be available as videos down the road. So keep an eye out for that. And if you would like a copy of today's recording, again, please contact Shannon. Oops, there we go. Or if you need CPE, please contact Shannon. Just make note in the subject line of the specifics of what you're requesting, and we will get that information out to you as quickly as we possibly can. I cannot thank you folks enough for being with us here today. We're going to go ahead and conclude this session. If you have questions, by all means, please email me. Let me know if you were not able to get your question in the chat box. If it hasn't been answered yet, we're going to review all the questions that haven't been answered. We're going to reach out to everybody who still has those things unanswered. Or if you come up with new questions along the way, please feel free to let me know. So again, I thank you very much, and I bid you all a very wonderful day.